All right, you guys, welcome to the Cashflow Empire, where every Tuesday we host our call. I'm super excited to present tonight's speaker, which is Zach. I met him at a meetup that they did in Altima, and he blew my mind with the lending. He was going back and forth with one of the hosts, and I love it. His presentation, and then you guys are always asking us, how are we funding these deals, right? How are we funding our fix and flips? And Zach, we do have a lot of investors in the house. We also have a lot of beginners that just don't know how it is that you're able to get the funding, right? Without putting thousands and thousands of dollars, on the table. So that's why I wanted to bring Zach. He is a box of knowledge. He knows a lot, and he's top number one broker here in Florida. So I'm super, super, super excited to bring him on.
Awesome. Thank you so much, Yoshi. I really appreciate the introduction and having me on this great forum. Really happy to be here. So how do you guys want to do this tonight? You want to ask me some questions? You want me to dive right in? You want me to do a little presentation? What
Yeah.
would be best for you?
Do you have that presentation that you had at the one meetup or no?
Maybe. Yeah, I got it.
Yeah, that presentation was sick. Like the way he broke it down, like scenarios, it was just amazing.
All right, cool. So we can do that. Okay. All right. So let's dive right into it. So actually I don't hold on. I'm gonna unshare my screen and move it over just so I'm looking at the camera and it's a little bit easier for me. So give me just 2 seconds, if you don't mind.
You're good, Zach. Take your time. And we're just super excited to be here. This is going to be a phenomenal call. And we'll let Zach go through the presentation. And guys, you guys just have your questions ready. And we'll answer all questions at the very, very end after the presentation. It looks like he's got 12 slides. So we'll have more than enough time to go through this and gather our questions. And then just kind of go from there. So that being said, Zach, go ahead, brother.
All right, Sergio, thank you so much for teaming me up. So first off, guys, my name is Zach Bleznick. I'm the team lead of a group called the ACE Group here at Home First Lending. We were founded out of Central Florida. I'm actually one of the owners of the firm as well, but I operate in a couple different roles. So you guys will get a little bit of all of that for me this evening. I've been in the lending industry for 17 years. I got in the business on March 15th of 2007. Great time to get in. I remember my second month in the business, I made like 17 grand at 20 years old. So what does a 20-year-old kid do with 17 grand? He blows it all. So I spent all that money thinking that I was going to be rich and famous, but man, the business crashed kind of all around me. In actually October of 2009, I actually filed Chapter 7 bankruptcy, like legit filed bankruptcy, went bankrupt in 2009. I'm now 37 years old today, built it all back up. Personally am responsible for funding hundreds of millions of dollars. My team, my best month in real estate and mortgage was actually 38 closings personally. And my team did another 60, 70 transactions on top of that. So I'm a wealth of knowledge. I'm in the broker side of things, which basically means that I don't work for a direct lender. I'm a broker. So essentially I work for you, not the bank. My job is to take you or your client's financial situation and match with the investor that best fits their needs. And over the last several years, I've kind of dipped, well, not kind of, I have dipped into the investor space. I love the investor space. The cool thing about investment, real estate mortgage is that there's not really a lot of emotions involved in it, right? It's either kind of the numbers work or they don't work. When you're dealing with people who are buying primary homes and stuff, right? It can be a challenge. Why? Because, people are sensitive on the interest rate, hey, I'm going to have the 6 or 7% locked in for 30 years. And it can be a big challenge for a lot of people who are investors, kind of like, hey, what's my spread going to be on this deal? And these deals are a lot simpler. A lot of mortgage brokers don't play in this space because the interpretation is that these deals are harder to get done. They're more complex and more complicated. And that couldn't be further from the truth. But that all being said, I love real estate. I love what it can provide, both, financially and, really the opportunities that it gives you to continue to elevate yourself as a professional. One thing I really realized and why I stuck into it, and I think this is really relevant in a time like this where maybe it's hard for some individuals. Maybe they're saying, man, rates are high. There's a lot of uncertainty in the business. The one thing I always tell you is that there's 4 basic necessities of all human beings. One being food, the other being shelter, the third being water, and I add the last one, love, right? Food, shelter, water, and love. That's what we all need. So we're in the shelter business. People are always going to need homes. So if you're an investor looking to make some money and create wealth in real estate, whether you're looking to buy homes, and flip them, you're looking to buy them and hold them and rent them out to people, there's always going to be a need. So that's why I'm so, basically such a big advocate for real estate, and why I've stayed in it for as long as I have these last 17 years. So guys, I want to jump in and discuss hard money financing with you guys today. Give me just a quick second. My girls up top are literally like bouncing, and I don't know if you guys can hear that banging. I've got 4 girls, and they're upstairs doing gymnastics right now. So little treat about that. So, all right. So let's jump into hard money financing, guys. As Yoshi said earlier, it is so easy to get access to funds. And today I'm going to talk to you guys a little about how to get access to funds if you have as little as 10% down. A traditional investor, if you guys are looking to get an investment real estate for the first time, you go to a mortgage broker, you don't know anything about creative financing, you don't know anything about buying fix and flips. You just want to buy your first fix and hold and or just regular traditional hold deal. And most mortgage professionals are going to turn around and tell you that you need 20% to put down. Now, that really is a huge barrier to entry for a lot of people, is because 20% on, let's say, for instance, I'm here in Central Florida in Orlando, the median home price is, let's call it 350,000. Well, that's $70,000. Not everybody has access to $70,000 plus closing costs immediately from day one. So what do? Well, most people, they just sit on the sidelines and they don't do anything, right? So now they're stuck. Now you've got the next level of investor where they say, man, I don't got 70,000. What can I do? Well, maybe I could buy a primary residence, and maybe I could buy a duplex or a triplex, live in one unit, rent out the others. Or maybe I can buy a house, live in it for a year, and then rent that out and go into another one. And that's what we call house hacking, right? But how do you accelerate your growth outside of, hey, let me buy a primary every year and kind of, turn that into a rental? You could accelerate it by buying properties that are distressed, right? And sellers who need to sell their homes or are looking for creative scenarios, and utilizing fix and flip. Now, I'll give you guys kind of the pretense of this whole thing. While you do need 10% down, there's something out there called gap funding. Some of you guys might have heard of saying where, hey, how do I get a full 100%? Well, gap funding will come into play when you have a partner, maybe somebody who's going to do a JV or a joint venture with you guys and come in and give the 10%. Maybe you source the deal. Maybe you're paying for some of the rehab, but they're coming and bringing the down payment. Those are all scenarios that are on the table. Now, what is hard money financing? Hard money financing, to me, by definition, is really just institutionalized private money. So if you don't know what private money is, which I'm sure a lot of you guys do, but if you don't, private money in my world is what you call peer-to-peer lending. Private money is like me going to Sergio and saying, hey, Sergio, I know you're rich, man. I know you got a couple stacks sitting there and I need a little bit of help, kind of fixing up some properties and getting started, man. I think I'm gonna need like 300 grand. He's like, Zach, I got you, bro. Go source the property. I'm gonna give you that 300 grand. Give me 10, 12, 13% on my money. I'm cool. I don't feel like doing all that headache. Just get me a nice little return because I got my money just chilling in the bank and I'm fat and happy with that right now. And I go, Sergio, man, I appreciate that, bro. I'm going to go find a deal. So I go find a deal. I come to Sergio a month later. He's like, man, sorry, my dog ate all my money, bro. Or, my mom, I had to loan her some money, or man, I had another loan out and my friend didn't give it back. Basically, Sergio may or may not have that money. And it's really based on how Sergio's feeling that day, whether I'm going to get access to that money or not. And that can be stressful when you think you got a relationship with somebody and you're going to get funded on your deal. And then they change their mind or they don't have an appetite for that deal. They're not willing to take a risk on that particular property. Why? Because they're lending their own money. And there's a lot more emotion involved in that and a lot more risk. Where hard money is the same. And what I mean by the same is same type of terms, same type of rates, same type of kind of overall transaction, but you're dealing with a bank who is well capitalized, who has hundreds of millions of dollars. And they're not going to say, oh, sorry, I don't feel like lending you today because I'm not in a good mood, or my friend didn't, pay me back. They're going to tell you that they're not going to lend to you because maybe that property is not marketable or doesn't fit their numbers. But of all the hard money deals I've done, there's very few that I'm very happy to hear this and say this, that most investors, they know what their ARV is and they're able to get financing. So we'll talk about all that. That was a big lead up into what we're going to get into today, but I thought that was important to kind of start off with that. So basically, guys, let me go over some guidelines for hard money financing. So first off, because we are dealing with a bank who is funding these deals, they are going to do a soft credit check. Okay. And they're going to look at and make sure you have a 640 credit score. Now, although they're looking at your credit, they're really looking at your credit because what they're looking for is a personal guarantee. Now, they're not lending you based on your credit. They're not even reporting to your credit, and you're not even closing under your personal name. You're still going to close under an LLC, but you as the individual are going to be that personal guarantor. So they're going to do a soft credit pull. They're going to make sure you didn't have any recent bankruptcies, foreclosures that you didn't disclose or you defaulted on. They're going to make sure you haven't had any blatant recent mortgage lates. They want to make sure that the person they're giving this $200,000, $300,000, $400,000 to, whatever that amount is actually somebody who is going to pay them back. Because no matter how good that property is and how much spread is on there, that bank still doesn't want to deal with the hassle, the headache that if you default, they still got a property that they got to liquidate. So they want to make sure that you're good as a borrower. Now, it is only 10% down, which basically means that 90% max loan to cost. Okay. And you need to maintain a 75% ARV. So the simple way of understanding what that actually means, what is 90% loan to cost? What is 10% down? What does 75% ARV mean? It basically means, in simple terms, you need to put 10% down. And as long as you have a 25% profit margin in that deal after your initial loan amount plus your repair costs, which we'll break down further what that looks like. As long as the bank knows that you have a 25% profit margin in the deal, they're going to lend on to you. So just use some simple math to kind of visualize it. Let's say you guys find a distressed property that you think you could fix up for 200 grand. So the math is simple. You're going to take $200,000 and you're going to subtract 10%. So that comes out to 180. That's your base loan amount that you're asking the bank to give you. Now, the cool thing is about hard money opposed to private money, a lot of times private money, you go and secure the funds to buy the house, but that individual is probably not going to give you, I mean, again, it's all relationship based. I know people that go get 100% financing from an individual plus repairs, but more or less normally somebody's giving you the money to buy the home, but you're going to have to figure out the repairs on your own. Now, the cool thing is we will give you the money for the repairs on a reimbursement basis. So let's say you say, Zach, I need 200 to buy the house and I need 50 to fix it up. So your 10% down is 180. You're going to add 50,000 to fix it up. Now you're at a base loan amount of 230,000, right? Again, 180 that you're asking for the loan after the down payment, and then up to $50,000 that you're going to need to draw from the bank to pay your contractors as the deal goes on. And we'll break down what that means more in a second. Now, we want to make sure you have a 25% profit margin or 75% ARV, which is after repair value. So you simply take 230,000 and you divide it into 75%. So that comes out to $306,000. So that means that that home has to be valued at least $306,000 in order for the bank to give you the loan with only 10% down. Now, if you come back and you say, hey, my ARV is 300,000, that doesn't mean you can't do the deal. It just means that you just got to put down another $6,000 to cover that spread. So they're only going to give you up to 75% of whatever the house is worth with the loan and the estimated repairs. Okay. Hopefully everybody understands that. Now, the minimum loan amount is going to be 75,000. The max is going to be 1.5 million. And I believe that we have a total allowable of either 3 million or 5 million right now, but I know it's at least $3 million, meaning you could have up to $3 million worth of loans and deals going with us at one time. And we're allowing up to $250,000 in repairs. Okay, which I'm going to show you guys on the next slide. 12 to 24 months. So we will offer you 12, 18, and 24 months, which is really powerful. There's only about 1/8% difference in rates on those. So a lot of private money say, hey, I'll give it to you for 6 months. I want my money back quickly. We only allow a minimum of 12 months, no prepayment penalty. We make our money up front on the origination. We charge a fee for that. And then if you pay off the loan early, there's no prepayment penalty, which is awesome. Because a lot of private money people say, hey, for me to lay out X amount of money for 6 months, I want to make sure I at least get 6 months of interest. We don't have a prepayment penalty on that. Okay. Now, as I mentioned, you'll see here that there's a max of $250,000 in repairs allowed. We're going to add a 5% contingency. And every time you guys take a draw on the money, again, we'll break down how the draws work. We're going to charge you $295, but that's all built in. Once you come up with your down payment closing costs to close out the deal, we're not going to charge you anything else on our end except for the interest payments, which we actually automatically deduct out of your business account every month. It's just a quick ACH, so you don't have to worry about writing a check. We literally just zap it out of your account every single month. Now, there's no appraisal required on these deals. So just to make sure you guys understand this, if any of you guys have purchased a regular home the traditional way, you need to provide asset verification, income verification, and credit verification. Those are the three main pillars for traditional financing if you come to me to buy a home like as a regular residential deal. With these, I don't, outside of looking at your credit, I don't verify any income or your ability to repay, okay? And I don't verify any assets, all right? So I don't need to see any of that, and I'm not doing an appraisal. Now, when that deal goes under contract and you provide me the necessary documentation, which we're going to review in a moment, I'm simply going to do an inspection, okay? Not an inspection like you guys do an inspection on a house. I'm going to do an inspection where I actually don't even need to send somebody out there. I will send you a link. You could schedule it virtually. You'll walk the house on video, FaceTime. And all we're essentially doing is we're confirming that that scope of work that you submitted to us with the contract is likely to bring that to basically a marketable place. Then we're going to do an internal valuation to make sure that, hey, what you're buying it for, what you're fixing it up, and then what you're estimating it to be worth when you're done, is that true and accurate? And we have a team of essentially internal evaluators who will evaluate it, and they're usually very close. And they're not super conservative. They're, from all the deals I've done, like I said, the investors have done a great job. They're usually super close. I'm not getting out of left field like where you say my ARV is 400 and it comes in at 350. It's usually very, very accurate. Now, the part here where you see that 5+ flips in the last 2 years, you could finance your own rehab. What that essentially means is that somebody might come to me and say, hey, Zach, like, yeah, I don't got $300,000 to buy a house cash and then another 50 to repair it, but I can put down 30,000 for a down payment and I can cover the repairs. I don't want to pay interest on that $50,000 in repairs. And we're like, cool. If you can show that you did 5 flips in the last 2 years, you could finance your repairs yourself. Now, if you didn't, you could finance the repairs yourself, but you still need to request the amount that would be necessary from us. Meaning, if you say I need 50 grand, I need to still calculate that 50,000 into the loan that I'm giving you. And it's like an equity line of credit. If you've ever, that's the best way to describe it. It's like, I'm going to take the 50 and I'm going to put it over here and you're going to draw on it. Meaning you can do the $50,000 worth of repairs yourself. And if you don't need to draw on it, then it's fine, but we want to make sure you have it. So it's better to have it and not need it than need it and not have it. So if you're like, listen, I could finance my own stuff, cool. We just want to make sure as a lender that you don't say, yeah, I could do it, but then you run out of money and now we're stuck with a property that, you know, you can't fix up because you didn't have the money to do it. So if you have less than 5 flips in the last 2 years, we're going to at least set the money aside for you, but we're not going to charge you any interest on it unless you draw from it, okay? And it's important to understand how that works. So we don't give you 50 G's at closing to do your repairs because that's also, we don't want to make sure you mismanage your money. We're going to set it aside, and depending on the relationship with your contractor, and that's why it's important to have a great contractor, is because we're going to reimburse you based on deals or based on how, based on jobs completed. So I'll give you an example. I'm doing a personal flip right now. I'm using hard money, right? It was like $130,000 that I needed to do this deal. Well, my contractor said, hey, Zach, write me a check for 20 grand to get started so I could buy materials. So I still had to come out of pocket a little bit of seed money, but within a few weeks, once he completed a certain amount of the job, I was able to get like $36,000 of a draw. And then now I've replenished my 20 and now I'm kind of using the bank's money at that point. So depending on how you set up the draws in the job, you'll need probably a little seed money, but then you'll be able to start working with the bank's money. Now, some of you guys might have a relationship with contractors. I did a fix up where I used a contractor. It was a great friend of mine. He's not hard pressed for money. He does multi-million-dollar jobs all the time. He did my whole rental for 70 G's. And at the end of 3 months, he just handed me an invoice for 70 grand. Nice guy, right? But that doesn't happen all the time. So I didn't have to pay any carrying costs. I didn't have to pay any interest on the money. I could have just taken one draw and been done with it or paid it in cash. But that's very unlikely thing, that unless you, again, have a family member or contractor that's willing to front your entire project. So make sure you have a little bit of seed money. So to recap, because I'm going fast because I know we're limited on time, you need your down payment, 10%. You need your closing costs, whatever that is. Now, sometimes on these creative deals, when you're buying deals from distressed sellers or wholesalers, you end up getting stuck with the seller's closing costs too. So make sure that you're factoring that in. And then you need a little seed money to get your project started. Okay. Interest rates start as little as 10%. What I see is really somewhere, usually like this past month has been about 11.75. So 11.75 with 10% down with a 720 or plus credit score. And usually you're paying about 3 points on these deals, which is points, if you don't know, is basically a 3% origination fee from the lender and us for taking this out. Before I go any further, anybody got any questions?
No questions, but I'd like to say, like, this has just been such an amazing call so far, because Zach, just really quick, we also we obviously do fix and flips as a whole here in Dallas Fort Worth. And guys, I want you guys to understand that, you know, we partner up with people like Zach to be able to take down and to get these flicks and flips done, you know, and with the profits invested in the multifamily. That's how we're able to buy and invest in the multifamily all over the Metroplex and just kill it by partnering up with people like Zach's. And that's how we're able to just really get all our flips done, right? I mean, and sometimes we don't want to use our money. We're like, you know what, let's just, you know, let's partner up with somebody like Zach and you know, just not put that much down, not fund it ourselves, right? But it's just it's just awesome that this is how we're able to do this, guys, and to have somebody like Zach in your arsenal, to be able to make this dream a reality of making this wealth with the fix and flips and then investing it in the multifamily. So I love how you're just breaking everything down, Zach, just for the people that don't understand, or that are probably needing someone like you in their arsenal to come in and begin and fix and flip. So
Yeah,
I love it so far.
Thank you. And Louis, I'll go to you in just a second. This business is all about relationships, right? You know, as an example, the flip that I'm doing right now, like full disclosure, like I'm on the other side of it, meaning there's a guy who came to me and he goes, Zach, I sourced a property. You know, I will manage the entire transaction. I will do everything. I'll handle the contractors. I'll handle everything. You just put the 50 down to get it going. Our spread on this is 100 grand. So he's got zero of his own money into the transaction. Like he's had to swipe his credit card like once or twice for just like miscellaneous over budget types of things and then gotten reimbursed back from me. But essentially he came to me, he's like, hey, Zach, put up 50. I'll give you your 50 back plus another 50 on top of it. So this guy's got zero money into the deal and he's going to make a $50,000 rip on this just from managing the transaction. So even if you don't have 10% down, find a guy like me who maybe has 50 grand and you can say, hey, I got a hard money lender. Can you do this or partner up? Like there's so many things. Or even if you don't have the 640 credit score, but you got the money, go to a friend, say, hey, I know you got good credit. I got the money. Can you personally guarantee this for me? I'll put it up. Let's work together to try to knock this deal down. Louis, you had a question?
Yes, sir. Just a quick question. Do you guys do like loans all over the United States, or just in Florida area?
I do loans everywhere. For this product, I can do them everywhere. And then for regular traditional loans in about 13 states.
I am in Virginia.
We can do it in Virginia.
Okay.
Yeah, for this fix and flip
gonna...
product. Yeah, but if you anything you need, we could always make a referral if it's something we can't cover.
All right, thank you very much. I think I'm gonna use you.
Hey, can you guys hear me? I'm at a taco truck.
You can hear you at the taco truck.
It's Taco Tuesday.
Right.
So I'm on right now in the underwriting stage. What are some things people miss during their underwriting that you have to factor in with working with a hard money lender, like point fees and all that stuff that a lot of people don't talk about?
I mean, it depends on who you're working with, right? And what's the level of disclosure. these deals are so simple. I mean, the one thing that I see like an investor recently missed is factoring that he needed to get insurance because you're not doing private money. Like you're dealing with a bank. They want to make sure that if you're doing the renovation, and the house burns down, that they're insured. So that's probably one thing that people miss is factoring in insurance costs. Um, you know, outside of that, I mean, there's not much, right? Because I only and this can kind of lead into my next thing. We can answer Robert's question real quick, and then I can kind of show you what's needed, and maybe something will come up that's missed there. But Robert, do you have a quick question I can answer for you?
Actually, they both of them asked the same question that I wanted to ask you. One being, do you lend in South Texas? And two, yeah, like what are you requiring for do you underwrite the deal yourself and the software that's needed? Because I feel like that's one of the pieces that I'm missing, you know?
Yeah. So when it comes to underwriting the deal yourself, like you gotta have a great realtor in your local market that can comp these deals out and make sure that you're not getting, ahead of yourself in terms of, overestimating or underestimating it, right? So you want to have the people that you want to have in your arsenal really is a great inspector, somebody that you can trust that's not going to miss things, that's looking at it from an investor's eyes, not just somebody buying a primary residence that can kind of just maybe just deal with a couple things on like an older home. Like you're looking to fix and rehab it, right? So you want to have a great inspector. Obviously, you want to have a great GC that's going to really be thorough, and you want to have a great realtor that's going to comp that out, and it's not just going to look at their commission, but it's going to look at, hey, what is this house really going to sell for, and not try to just sell you a dream. Because there's one thing when you're trying to sell your primary residence and what you walk away with versus you doing this for profit and you making sure that that spread is there, because that spread can be eaten up very quickly, right? Somebody asks for a seller concession, $5,000's gone. You have to price reduce it, $10,000 gone. You have an extra month that goes by that you got to carry the property, another 3,000 gone. So you could have X spread and now $20,000 is eliminated from that overnight because you didn't price that property accordingly or they didn't give you all the right expectations on it. So that's kind of the best way for me to answer that question for you. Does that make sense?
Yeah, I'm a contractor and I've done 22 flips for other investors. And so I'm looking to start doing some of my own. But
Yeah,
I know, and I'm very familiar with the residential codes. So even though I'm not licensed as an inspector, but I did take a course and I never actually took the exam. So
and yes, we do both traditional and non-traditional financing in Texas. I have a branch in Houston. So what do you need to get this process started? We need a fully executed purchase agreement and we need a scope of work. So we have a template. We'll share it with you on Google. You'll fill it out. You'll add some comments. Very simple. Just basically says what's the scope of work. We're going to ask for every category. So it's just a plug and chug type of situation. As it being a personal guarantor, of course, we need your full name, social, date of birth, and current address. It's going to close under an entity and LLC. So we'll need your entity information, which would be like your corporate formation documents, obviously your EIN, your articles of incorporation, an organizational agreement if there's more than one member on that, and any, those participants in that entity that are on it, their personal information. Obviously the title company, so we can request title. Make sure you guys tell the title companies, even though you're writing these up as cash deals, make sure your title companies know that you're actually getting hard money. So yeah, it's written up like cash, it's treated like cash. You are getting hard money because some of these title companies, when they get a contract, they think it's cash and then they're blindsided when we get a title request. So just make sure that all parties actually know what's going on. Of course, homeowners insurance. If you guys have a preferred agent, if not, we'll shop it out for you. And then if you guys are purchasing condo, we will need the HOA's info so that we can request a master policy. So these are kind of the things that are maybe missed or not told you in the underwriting phase, but this is all that I really need in order to get a deal going. Now, the loan process is just really super simple. Again, you as an investor, you're really probably going into this deal knowing whether it's going to work or not. And outside of our valuation coming in low and those numbers not working, maybe you have to put a little bit of a larger down payment. it's pretty cut and dry. When you submit your contract to me and those needs lists that I described, basically I can give you a pre-approval if you need it, like as a proof of funds. But I submit the deal to our investor with that scope of work, and essentially it just goes into processing, right? I'm going to order title, I'm going to order insurance, and we're going to get that inspection schedule for you, whether in person or virtually, whatever your requirement is. And then we're going to do that soft pull. Then I'm going to know, okay, hey, you're good to go, or maybe there's something wrong with your credit. I'm going to let you know. And then once that inspection is done and that scope of work is done, we get our valuation internally. And at that point, we're just satisfying conditions. We're just getting them that fully binded insurance, that fully binded title, or making sure there's no issues on title. And then we're getting those items signed off, and we're funding your deal in 10 to 15 days. I mean, that's really it. Like, that's the process here. It's not complicated at all. It doesn't take a long time. We're not underwriting your income again, so we're not worried like, man, did we calculate your income wrong? It's like, hey, provide me the scope of work. We're gonna do inspection. Is the valuation there? Great. Let's satisfy the title and insurance requirements and close and fund your deal in 10 to 15 days. And once you guys are done and funded, like I mentioned, you guys can request draws. So once you'd like to take a draw, you can just contact me and I'll provide you guys a draw request form, or I could send you a link virtually. Again, like, we keep it super simple. You guys can have a physical inspector come out if you want to talk to somebody and kind of walk them through it, or you guys can just do like a FaceTime with our inspectors and take some pictures and video with them. And you just submit the invoices through our app. Our tech is insane. It's really good. You submit the invoices, the draw request form, and you get that inspection done. And literally, once our draws team signs off on that scope of work and making sure that those invoices were satisfied, we're going to wire money into that bank account that we set up to withdraw your payments from, like, the next day. So if we get inspection done today and it's signed off on, by 4 p.m. tomorrow, you're getting that money. So that if you have a great relationship with your contractor and they invoice you and they'll give you a few days, we're going to get you paid quickly. So you don't have to worry about like waiting for us to process or taking a week or 2 weeks to pay. We literally will pay within 24 to 48 hours. That's pretty much hard money for right now. We do just briefly let you guys know that if you don't want to flip the property, you want to hold it, which is the BRRRR strategy, right? Buy, rehab, refinance, rent, repeat, so on and so forth. We can do that internally. So we will allow you guys to essentially pull all of your money out of that deal within a 90-day period, up to an 80% loan to value based on the original purchase price plus repairs. If you go past 90 days, we will allow you to order a new appraisal based on the new valuation and pull up to 80%. So this is truly an opportunity for you guys to put money down, right? Whatever you got into the deal, you can take out, and then some if you've built some equity in it, and take that money and rinse and repeat on another deal. A DSCR loan is simply referred to as a debt service coverage ratio loan. Again, no employment, no income verification. The only verification is basically credit based, like the prior loan, and making sure that the rent can be, or the mortgage, that the rent can support the mortgage payment. So depending on what your equity position is, would determine how much we need in a spread. So, like, give you an example down here. If you end up having 35% equity, so like for instance, all in, you're in at, let's just use $100,000 as simple. All in, like, you're only at 65,000 loan amount, but your house is worth 100 grand. We only need the home to rent for 80% of what the mortgage payment is. Now, that might not make sense for you as an investor. Like, hey, why would I want to keep something that's only renting 80%? Well, maybe you're doing short-term rental or something like that, and you're actually making more money, because we're looking at long-term rents. Now, we do have lenders that will evaluate short-term rent if you're doing like Airbnb and stuff like that. But we would just have to place those loans a little bit differently. So, guys, this is me. If you want to follow me on IG, it's at Zach _ the mortgage broker. Follow me on Instagram. That's where I post the majority of my content. And then Fully Funded is my podcast that we're just getting off the ground. It covers 3 main pillars. Fully Funded is a play on words, but it's really covering everything with health, wealth, and lifestyle. And Fully Funded is more like fully funding your life. We talk about hacks in real estate. We talk about hacks in the Turo game. Like, I got a couple cars on Turo right now. we do a bunch of different stuff. So if you guys want to follow my journey, get more information, connect with me on the side, that's how you guys can find me. So I'll open up for questions, hand it back over to the host, over here, Yoshi, Sergio. If you guys have any questions, I'm here with you, whatever you guys need.
So I have to know, is the Lambo on Toro too?
It is, yes.
Oh, okay. Okay, you guys. I went into the event. I was like, damn, that's a sick ass car. And then I didn't know who drove. And then Zach posted it on Instagram. I'm like, oh, he has a really nice Lambo. Beautiful color too. Zach, thank you so much for coming in today, guys. If you guys, I didn't know about the DSCR loans, Zach. I didn't know you do them.
Yeah, I do everything. I literally do every single possible loan you could think of, from investor loans to bank statement products to foreign nationals to high net worth individual jumbo loans, VA, FHA, USDA, construction loans. I do ground up financing, as I'm just getting to. So if you'd like to build and develop spec homes and stuff like that, I'm getting into that space. Literally whatever you need, I do it.
Zach, quick question, just because we have a lot of people in this room right now who's just, I know you're based out of Florida, but we got people literally from all over the country. Do you lend outside of Florida? Now, you may have answered it, but I missed it.
Yeah, so for creative financing, we're not bound by really the same guidelines. We can lend in I think 40 or 45 states. When it comes to traditional financing, again, if you just want to go full doc, do a regular conforming loan, conventional FHA, we're mostly in Florida, North Carolina, Tennessee, Louisiana, Georgia, New Jersey, Pennsylvania, Michigan, Colorado, Pennsylvania. I'm probably missing a few, but those are some of the main states. Texas. I always forget about
His headquarters is in Houston.
Let's go. We're in Dallas, Zach. So we gotta. I mean, we're flipping. We got.
I just closed a loan in Dallas not too long ago. So
let's go. We're gonna get a hold of you for sure to see what we can whip up. And I think my next question is, I mean, we got partners in Mexico and Colombia too. Are you go out of the country yet, or?
So we're not lending out of the country, but we are definitely assisting foreign nationals who want to invest in real estate in the U.S. We can help those individuals for sure.
That was actually the question I was kind of leaning towards, just because we're doing a lot of things with some foreigners who are coming into the States and investing into the States. I mean, we're doing the multifamily stuff with them, but it's great to know, and I just. Man, I'm excited, man. We need to get on a call soon, just to see where we can collaborate together, help each other out, and just kind of grow, man. I mean, why not, right?
Whatever I can do for you guys, and just kind of going a little bit off script, a little bit, just give you guys some of my experience. So not only do I lend hard money loans, but I'm an example of, you got to start somewhere. I'm certainly nowhere where I want to be in this creative space, but I can give you guys advice and help you. I've personally lent my own hard money or private money, right? So I've done several of my own private money deals. I do a handful of those every single year. I service private money deals. So if you're looking to put some money and get an investment, we'll service them. I've done flips, I've done holds, I've bought multifamily, I've done the house hacking. I mean, I've purchased a wholesale deal. I've not personally done wholesale or sub to wholesale the property, but and I'm on the finance side. So I'm like a Swiss Army knife to you guys, really. Is I have a lot of different tools accessible, and just leverage me, use me however you like. And 17 years in the game, I'm still hungry. I'm still fired up every day to do this. I'm not complacent, and I will help you guys achieve your dreams however I can possibly.
Hell yeah, let's go. I love the analogy or the metaphor, whatever you want to call it, the Swiss knife.
Swiss Army knife,
absolutely
baby.
Love it, man. And
go.
Yeah, I think Karina had a question. I don't know if you answered it. Does HML require insurance during construction?
Does HML? Yes, it does. It requires a builder's policy only.
Nice. It looks like Mr. Robert Gordena out of San Antonio, Texas has a question. What's up, bro?
What's up, my man? How you doing?
Good, man. Go ahead, brother. Ask your question.
I have a question about spec homes.
Mm-hmm.
Pretty much the same process as far as getting approved, or do you have to own the land first, or?
Yeah, I mean, we're ground up, so you got to have the land and you could use the land as collateral. The only thing about spec home financing, like these hard money deals, like you have to have zero experience. Like I'll give you $500,000 if you got a 640 credit score and you got a marketable property. Like I'm not even like literally, like it's that easy. But when it comes to building like spec homes in the investment space, you're gonna have to add somebody to your LLC that's got a couple like and kind projects in the last 2 years. So probably like 2 or 3 like and kind projects in the last 2 years. So you're gonna need somebody who's built before, right? Like you can't come in as a brand new investor. Now you could go on the traditional side, and if you don't want like a hard money deal and do like a full doc loan, there's some investment products out there that you can do like one-time closes where you buy the land and the house at the same time. But to build like spec homes, do hard money, not have to really prove income to do that, you're gonna need a little bit of experience to do that.
Cool. I have experience building for other people. I've just never done one on my own.
Yeah,
But
it's got to be like under your own LLC.
yeah.
Cool.
Clyde, what's up, my friend?
Question.
Clyde, we can't hear you.
You're on mute.
Sorry about that. So just want to ask a quick question. So based off of where the market is right now and based off of what you're seeing from a lot of your clients, what's the typical time that the full fix and flip process has been taking?
Man, I mean, that's all over that's all over. I've had some people, well, fix and flip loans I can close in 10 and 15 days, but to fix and actually flip and sell it, I mean, some people do it in 3 months, some people do it in a year, right? Like you just never know. Some people overly price homes, they hold them for 8 months, they're sitting on the market. I mean, really, that's kind of a very subjective question. And just there's so many factors that play into that. I mean, I think any experienced investor in their mind thinks that they can get in, renovate a home in 30 to 45 days, put it on market and sell it in 30 days and close. So they're in and out in 90 days. But I've been really heavily in the space, like in the investor space for the last 2 years, and I haven't seen any deals close in less than 6 months. There's always something that comes up, or the deal it gets extended a month because you got to fix something that you didn't anticipate. So I would say like 6 months is probably more realistic.
Okay, I always wanted to ask that because, like you said, I heard a lot of people talk about that 90-day process, but I'm wondering how many people are actually
Bro, it's
doing
like
that.
unicorn. It's a unicorn. I mean, that's just everything has got to work on that. But I've had people that did everything in 4 months and went to market, and then that person fell out of contract, right? And now they need to go find another buyer, and then that buyer can't go for 45 days. I mean, you just never know. But here's the cool thing. I want you guys to know, if you need to hold a property with me, you got 12, right? 18, 24 months. And if you got a big spread on that and you got to lose some money, like I'm not a bill collector. That's a beautiful thing working with me. Like I'm not coming after you after 6 months, like, and harassing you. Like I'm giving you 12 months. And you know what? You could just refinance and keep it, worst case, with me. If you're just like, listen, I could just rent it out for a year. I'll wait for the market to bounce back, whatever, just rent it out and you're all good with me. And at that point, I won't need any money out of pocket because you've already built your spread in, from doing the flip. So you just cover your closing costs and everything in the refi, and you just keep it and rent it out. So we give you a little bit of a safety net.
Okay, sounds good.
All right. Anybody else?
Robert, do you have another question? I saw you going up and down, so I wasn't sure.
So you said you did a 12-month loan, 18-month, and 24. And let's say that 6-month period, is there like a prepayment penalty, or are you paying the?
Nah, no prepayment penalty. So we charge our fees up front.
So it's just a 3% on the front end, and on the back end, it's just no fees whatsoever?
No. I mean,
okay, cool.
There's an admin fee that our investor charges for $1,500, but that's it, man. Like, they're just flipping money. So they're making interest, they're making fees, and that's really it.
You require like pre-qualification from a conventional lender beforehand?
No.
No? Okay. And do you help convert that over if you want to keep it, or is that something that we just do in
Yeah,
our
that's what I discussed that in my slides, which if
Oh,
maybe I can get that out to I can get that out
I,
to Sergio and Yoshi
I
and get
I'm sorry.
yeah. So we do it all. So we can keep everything in house for you. We're a one-stop shop.
All right, thank you.
You're welcome.
Okay, does anybody else have any questions before we go ahead and close the call? Okay, I'm gonna take that as a no. So Zach, thank you so much. Guys, he's literally a one-stop shop. I've been dropping his Instagram throughout the call. So don't forget to go ahead and follow him on Instagram. He drops a lot of really, really good videos. Go ahead and, you know, follow his podcast, listen to him. And if you guys have any questions, just go ahead and reach out. Thank you guys so much for joining, Zach. Thank you so much. I know you're a very busy man. So thank you so much for joining us. All right, you guys.
Thanks,
We will
guys.
see you guys next
Thank you, Zach.
Tuesday.